Time for this week's stock picks. We're going to start with Tracy.
My pick is Gardner Denver. The ticker is GDI. And I like this company because it's one of those that goes way, way back. They were actually founded in 1859. And they made like compressors for the original steam engines, and then it kind of went on from there. So they're a big pumps and compressor company, but now they're in 40 countries around the world. So they're not just US based anymore, big industrial manufacturer, but they're doing real well. They just had 2 record quarters in a row. Mainly it's because of the shale play, because their pumps are used for the drills. So that's
North Dakota, fastest growing economy in the world.
Right. This has been big business for them. That division saw revenue up 38% in this last quarter. It's expected to continue here. Plus, people are using their drills and pumps a lot in the emerging markets, which is a big portion of their business right now as well.
But not just petroleum? They make
they make across the board.
Right.
They do a lot of medical stuff. Energy is a big part of it, but also autos, every kind of industrial use for the pumps and the compressors. So, things look really good for them right here. The earnings are supposed to rise about 62% this year and another 10% or so next year, as the analysts are being a little more cautious on 2012, just because they've had year over year really good growth, and it's going to be hard to top that. But with the shale play being as hot as it is, I'm expecting that to kind of keep them elevated.
I like it. The pumps are like the guns and bullets of the oil wars. All right, Kevin, what do you got?
Mine is also an industrial stock. Actually, it's an ETF. It is the Industrial SelectSector ETF, ticker XLI.
Whoa.
Obviously, it is a
big
play,
chunk of the market.
Right, it's a play on the industrial sector, but also the U.S. economy and the global economy. And the reason why I like this is you can see in some of the most recent economic reports that the industrial sector is leading the way. It's leading the way on exports. You can see it in the manufacturing numbers. You just saw it in last week's leading indicators report. So the industrials look like it's a fantastic space to be in. What I like about this one, though, is that instead of taking specific risk on an individual stock, you're playing a whole basket of stocks. And if you were to take a look at the top 10 holdings, you can see that they are largely comprised of some of the largest blue chip companies. You've got GE, Boeing, Caterpillar. So it looks very good. If you were to look at that group, they have a projected growth rate of about 15.8%, which is fantastic. The average EPS surprise, their last time out, is 7.6%. And I believe when you couple all of these good things with the fact that we may see the GDP rate in Q4, look pretty spectacular, I think it's a good play. I have a price target of $37 from right here. That represents a 12% gain, and I really like the added safety of not being in just one position.
Yeah, and that means the S&P is going higher too.
Right. Let's.
All right. My pick is IBM, and not just because Warren Buffett likes it. 2 years ago, it was my safe money pick to outperform the S&P 500 for the next 3 years. It's done pretty good. If you take a look at a chart of returns this year, IBM's beaten the S&P about 4-1. Now, why did Buffett like it? Buffett liked it because he saw a moat in the way they serve their customers. IBM serves their enterprise technology customers so well that they would never dream of leaving, or it would be too costly to leave. The thing that I saw a couple years ago was IBM moving into energy infrastructure in the smart grid. So they're in about 20 countries in Europe and another dozen in Asia where they've gone to the government, a municipality, small town, big city, whatever, and they said, let us monitor and help you control your energy usage across the grid to save you money. So IBM has embedded themselves, and I don't see a European financial crisis making those contracts go away. I think those are good contracts to have long term. Stock has been trading, it's probably down to 180 this morning. When I looked at it last week, I said, don't run out and buy it at 190. Wait for a pullback, maybe to 175, and we may get that during this downtime. Forward PE of about 14, 10.7% growth gives you a peg of about 1.3, and that's why I like IBM. All right, thanks for joining us. We'll see you next week.